Welcome back. As the fight for student loan forgiveness continues, the Biden administration announces some potential changes that would affect the existing revised pay as you earn repayment plan. Senior economist at Lendingtree and student loan expert Jacob Channel joins me for a discussion on what this means for borrowers. Jacob, thank you so much for joining me.
Thanks for having me.
Now, the last time we spoke, there was a lot going on in regards to student loan, plans, and there's a lot of legal issues, I should say. Can you just update us on what the legal status is of the student loan forgiveness program?
Yep. So unfortunately, it's pretty much the same as it was the last time we spoke. So in other words, right now, everything is kind of up in the air. The Supreme Court has agreed to hear the case regarding whether or not broad student loan forgiveness is legal, in their opinion. So we will probably know sometime in the nearest future where this all stands. But unfortunately, as of right this minute, we really don't know for sure what the Supreme Court is going to say, or what the overall legality of this plan is. So unfortunately, what that means for everyone is that we've just got to wait a little bit longer until we know for sure.
Now, before we get into the core of today's topic, can you just talk a little bit about the revised pay as you earn repayment plan and what that is?
Yeah. So as the name implies, a revised pay-as-you-earn repayment plan, it is revising a current repayment plan that already exists, that is designed to help lower income people keep on top of their student loan payments. So in a nutshell, what the plan generally is like I said, it's a type of plan that you can qualify for through the Department of Education that'll help you potentially, for example, lower your monthly payments or otherwise make repaying your student loans a little bit easier. The revisements to the plan are in a nutshell just designed to kind of make things a little bit more equitable, a little bit more generous, maybe a little bit easier to follow. So while the name is kind of a mouthful to say, if you want to play a fun game, try to say it 10 times fast, it's actually a very straightforward sort of plan, just designed to help people keep on top of their student loan payments.
Now, the U.S. Department of Education proposed new regulations to the REPAYE plan that could cut monthly payments for millions of undergraduate borrowers in half. Can you tell me a little bit more about that?
Yep. So, like I said, the current, the revising of this plan is really designed to make it a lot more generous in many respects. So, for example, one of the things that the plan is aiming to do is not only increase income thresholds for people who qualify. So, for example, individual earners earning $30,600 a year could potentially qualify for as little as $0 that they have to put for their student loan payments each month. So what this means more broadly is that across the board, for many people who qualify for this kind of income-driven repayment plan, they could potentially see their monthly payments be cut in half, as you said, or decrease by similar amounts depending on who they are, what kind of debt they have, how much they've borrowed, so on and so forth. So it can be a really, really advantageous plan to take advantage of, especially if you don't earn a lot of money, because best case scenario for you, you could still be counted as making your payments by the government, so to speak, without actually having to shell out any money every month to keep on top of your payments.
Now, I understand that this is specifically for undergraduates. Can you explain why?
So I don't know if the Department of Education has come out and explicitly said, here's our rationale, but I think that there are a few likely reasons. So for example, when these topics come up, oftentimes people who are opposed to them say, well, you're really just giving a handout to the people who have money, because it is true, generally speaking, those with college degrees earn more money than those without college degrees. So I think that by specifically targeting undergraduate degrees, the Biden administration and the Department of Education are sort of undercutting that argument a little bit by saying, no, we're not just writing blank checks to people who earn a lot of money. We're specifically targeting people who do have college degrees, but are nonetheless, not earning a lot of money, which is something that happens quite often in the United States. Outside of that, I think that there is some. The reality is that most people don't have graduate degrees, so this could be an attempt to sort of keep things streamlined, keep things simplified, and target the majority of people who would need this help. The vast majority of whom probably would not have a graduate degree. Keep in mind, only about 13-14% of college graduates have a graduate degree. So the reality is this plan not being there for graduate loans isn't really going to impact most people. So I think it's really a combination of factors, wanting to specifically target this toward lower income people who are more likely to not have a graduate degree, as well as just kind of keep things as fair and equitable as possible, and to undercut some of the criticism that maybe these plans are really just handouts for the rich or something like that, which is a common argument you might hear against them.
I'm really glad that you kind of brought that up because I wasn't even thinking. I was just thinking, oh, maybe graduate degrees are just too expensive, or I just thought there was something else behind it. So I'm really glad that you kind of brought up some very reasonable and very realistic and totally understandable reasons why it's specific to people who are in undergraduate degrees. So thank you so much for explaining that. Now, how does the new proposed repayment plan compare to the current one?
Sure. So as I kind of alluded to earlier, the new repayment plan is pretty similar to the current one. But the big difference is that, in a nutshell, it just makes things a little bit more generous. It makes things maybe a little bit more streamlined. So, for example, the income requirements are a little bit higher now, which means you can earn more money and still qualify for this kind of help. There are other things that are really big deals. For example, interest capitalization under this plan is going to go away. So what that means is that if you're making a monthly payment, even if it's $0 a month, you're not going to have to worry about interest being added to your loans. Unfortunately, something that happens to a lot of student loan borrowers and why a lot of people really struggle to keep on top of their student loan debt is even if they make a payment, if it's too small, the amount of interest that's added to their loan will just keep increasing and increasing. So you can end up in a situation where you've made payments every month for the past 10 years, but have a balance higher than what you started. This plan is trying to get rid of that. So even if you're paying, $5 a month, the amount of interest you owe on your loan will not keep increasing, and the amount you owe will not balloon over time. So, like I said, generally speaking, the plan really is just designed to make things more generous and easier to follow for borrowers who can qualify for this. And it's worth noting that, it's always going to be a little different from person to person. Every borrower, even every borrower who qualifies for this plan, is going to have a slightly different financial situation. They're going to owe slightly different amounts of money. So if you are someone who's thinking maybe this plan would be good for me, once it is finalized, it'll really be beneficial for you to reach out to the Department of Education or your student loan service provider and ask specifically, okay, what do these changes mean for me? Because they'll be able to tell you specifically, as opposed to what I'm able to do, which is give you sort of the general broad strokes.
Now, I want to touch on something that you mentioned, in that it was that, like, if your income is low enough, your payment could be as low as $0 per month. Now, I know for a lot of people that sounds really exciting, like, what, $0 per month? But you talked about interest, which I thought was very important because I think a lot of people tend to forget about that. Just to clarify, if it's $0 per month, that doesn't mean that you're not required to pay anything back, right? Or can you just further expand on that?
Yes, so you're exactly right. So this is $0 a month payment. You're right. It does sound very exciting, but it is important to remember that that in and of itself does not equate to your loan being forgiven. So basically, what the government will do under this plan is calculate an amount of money based on your income that you can afford to pay toward your student loans. So that number can be as low as zero, or it can be a few $100s a month. So depending on who you are, you could very well end up in a situation where the amount of payment that is calculated that you can afford to pay is $0. And if that's the case, you'll make $0 payments until your income increases or something about your financial situation changes that could end up modifying the amount you owe. So it is important to remember that that $0 amount may not last forever. In fact, it's unlikely to last forever. Hopefully, your income will increase over time and your student loan payments will also increase. It's also important to remember that while there may be some situations where people will make $0 payments for a decade or more and potentially end up with the remaining balance forgiven, those $0 payments are, again, not the same as forgiveness. And eventually, you still technically owe that money. Eventually, your payment could go up. So don't see that zero and think, oh, good, I'm completely debt free. It's not exactly the same thing. And do remember that even if you are on this plan, you should keep an eye on your student loan balance. You should keep an eye on how much you can afford to pay. Because in a worst case scenario, even with protections that this plan provides, you could end up in a situation where you miss a bunch of payments or your payment is higher than you anticipated, and you could run into some financial trouble as a result.
All right, thank you so much for clarifying that. Now, the US Department of Education is encouraging people to give feedback. Can you explain why this is so crucial?
Yeah, so the government really wants to be sure that this plan is actually helpful. And sometimes government plans aren't as helpful as was anticipated. So I think the Department of Education, the Biden administration, really want people to reach out and say, okay, here's what I think about the plan. Here's how it could help me. Here's where I think it could be improved. So what you can do is go to a website called regulations.gov. You'll be able to search up this plan. It's a public forum. You can provide comments. If you do get confused, if you're having trouble finding it, you can reach out to the Department of Education at ed.gov, ask for directions, so to speak. But really, like I said, the goal here is to make sure that this plan is legitimately helpful for the people who need the most help. So if it is something that could impact you, if it's something that you may even, qualify for, or think you qualify for, or want to apply for, it's very important that you make your voice heard. I think it's sounds a little cheesy, but it is worth noting that in the United States, ultimately, the people are the ones who make the decisions, even if it doesn't always feel that way. So if you want your voice to be heard, you actually have to go out and speak up. And so I think the government is really trying to encourage people to do that with this specific proposal.
And I want to very quickly, just touch on, what this could mean for borrowers of color, because I noticed a lot of places kind of making a point to mention that this is going to impact those communities a lot. Can you talk about that quickly?
Yeah, so an unfortunate reality in the United States is that oftentimes folks of color or members of other minority communities end up disproportionately saddled with things like debt or other financial burdens. So because of that, because this plan is designed to target people who are dealing with the most financial stress, it's going to really help in many cases people who are Black, Latino, so on and so forth. So while this plan is not necessarily specifically targeting members of minority communities, it's nonetheless going to have a very profound impact for a lot of those members just because of the way finances in the United States kind of shake out. We could see a lot of aid and a lot of relief going toward, for example, the Black community or other communities that are trying to get ahead by getting a college degree, but unfortunately don't have the intergenerational wealth or the access to credit or things like that that can help them lower or graduate college without any debt. Basically, just because of how the cookie crumbles in the United States, this plan is probably going to be even more beneficial to people of color than a lot of other folks.
All right, Jacob, thank you so much for joining us.
Thanks for having me.
If you want to know more about Lendingtree, please go to their website at www.lendingtree.com or follow them on social media at Lendingtree. We have to take a quick break, but we'll be right back with more Open right after this.